Hello, what's up, guys? How we doing? Hope we're having a very lovely day. So, this is going to be the part two of advanced market structure. So, if you pay good attention, the video is going to be fast and short, very simple video, just to know how to mark out your higher highs and your higher lows perfectly. All right. So now you open your chart like this. Now you can see currently on my screen. This is GBP USD. That's pound sterling and against the US dollars. This is the chart here. So in the bullish markets we have the higher highs and the higher lows. While in the bearish markets we have the lower highs and the lower low. So now we know for sure that this market is bullish now. You understand? So now we've identified. All you need to do is identify a low and identify a high. All right. So the low is the higher low. The high is the higher high. You understand? So we're going to be working with this tool. Let's work with this tool. This is a higher high because it broke higher than this high that is here. All right. This is the tool I want to be using. All right. It broke higher than this high here. So it's qualified to be a higher high here. All right. So then where is the higher low then? You can't identify the the higher low yet until price has broken above the higher high. All right. So this is the higher high here. See where price broke above it here. Price broke above it here. And you look for, where price started retracing. You understand? Then this is basically the higher high. All right. So where was the lowest place that sponsored that break of structure to the upside? So this was it here. So this is your higher low here. So this was higher low, higher high, higher low, broke structure here, then your new higher high. Now, where the price breaks structure again, then anytime price breaks above the previous higher high, it is known as break of structure to the upside, right? Not change of character. Change of character is when it changes, direction from bullish to bearish. You understand? So price, broke above it in this place here, and this was where it started reversing from. So this is the next higher high here. So where was the lowest place before the lowest place that broke above that higher high? So this is the higher low here. All right. So you have basically here you have your higher low, higher high, higher low, higher high, higher low. Broke above this last higher high here. So this is your next higher high here. You understand? This is your next higher high here. So if price should break above, like this is price here, if price should break above this high here, you understand, it's going to form a new higher high. Then the lowest place before that break of structure happened, that break of structure that before price broke above this high here, that lowest place is known as your higher low. All right. So this is your higher low here, your higher high. So that's basically how to mark the structure in a very simple and understandable way. All right. So when price broke above it here, this was where price started retracing to the downside again. So this is basically the next higher high here. This was the next higher high here. And this was where, all right. Sorry. This was the next higher high here. This was where price broke above it, all right? You understand? So now, remember I said the best place to buy in a bullish market is the higher low, because you want to be buying at all these higher lows here. So when the price goes up to all these places, you'll be in profit. You don't want to be buying at the higher high. If you buy at the higher high and the price goes down like this, the price wants to retest to make a higher low before going up again, you might enter a loss, and you don't know how long. We don't know for sure how long the market is going to retrace. The retracements can turn into a change of character. The retracements might not even create a higher low again. The retracements might just change character to a bearish market. You understand? So all you want to be doing is waiting for the market to give you a higher low. This is where you want to be entering the market at all these places here, all this deep. If you remember in trading, you hear something like buy the dip and sell the highs. That is actually really a term we use in Forex also. We buy all this, we buy from all this deep here. You understand? So all this rally will be ours. We'll buy from all this deep. We buy from all this deep. You understand? I will show you how to buy from all those deep when we're talking about entry models. But this is just how to mark your structure. All right? To know your higher highs and your higher lows. To know your lower highs and your lower lows. So price broke above here. So now this is your next higher high here. And where was the lowest place that that sponsored that break of structure that created a new higher high. This was the lowest place here. So this is your higher low, your higher high. All right. So now remember what I said. If the market keeps on, breaking the higher highs to the upside, write this one down. Listen to me attentively. If the market keeps on breaking the higher highs to the upside, the bullish trend is very valid. You understand? That means the trend of that bullish trend is very, very strong and is valid and is a continuous trend. But once the market breaks the higher low, like it breaks this higher low, when I mean break, like price is supposed to do something like come and go up again, but it didn't come down and go up again. Like it came down and broke below the higher low. That is a change of character. Now the market is no longer a bullish market again. It's now a bearish market. This is what I mean. We're saying that if price breaks above the high here, that price is a bullish market, because if it breaks above this high here, it's going to form a new higher high, therefore making the bullish trend valid. But see something here. It didn't make any higher low around all these places here. It even broke this higher low that was here. This was the higher low that was here. It broke past it. So when market has broken past the higher low here like this is no longer an uptrend again. The market has changed. You understand? So the place that the market stopped and started reversing up again, that's known as your new lower low. All right? This is your lower low. Lower low. Come on. Lower high. All right? Lower low. The highest point is the lower high. You understand? So now this is how you now mark the lower highs and the lower lows of the bearish market. Remember, the lower highs are the upper part of the bearish market and the lower lows are the lower part of the bearish market. All right. So now that you have your new lower low here, you have to pay attention to markets very well when you're marking markets, when you're analyzing. You understand? Because this is a lower low. This is not a lower high. This is not a lower high. Why did I say so? Because the lower high has to push price to break that lower low. You understand? But this one didn't break below here. This one here didn't break below this. This didn't break below this. This was the guy here that broke below this guy here. So where was the highest point? This was the highest point here. So this is your lower high, lower low, lower high. All right? Lower low, lower high. I will make one more example, one more video on this advanced market structure. You understand? So understand. So this is your lower high, because this was the highest place. Remember now, jot this one down. If you are marking your higher low in your bullish market, it's the lowest place that broke, that prepared and sponsored that break of structure that created a new higher high. Why, if you want to mark out your lower high in the bearish market, it's the highest place that actually really, broke, that sponsored the momentum that broke below the last lower low. You understand? So there was a retracement. This is now where it stopped here. So this is your new lower low here. All right? Lower high. Then you can see lower low, lower high, lower low, lower high, and thereabouts. You understand? This is where you have to go to your chart now and study yourself. Because if you just watch the video and you be like, you don't understand, it's because you are not visiting your chart. Visit your chart also, so you will know all these things. You can't know everything in the market like this. You have to visit your chart. So in as much as, okay, so back to what I was saying, as we buy the dip in the bullish market, we sell the highs in the bearish market. So these are the places you want to be selling from. These tops here, these lower highs, you want to be selling from here. So the market can come down and give you profits. You want to be selling at all these tops here. So now this is the point to take home from this video. The first point is this. Always sell from the higher low and buy from the lower highs. All right? How to enter the market, we'll deal with that. But you need to know about how to map out these market structure things very well. All right? Yeah, so that's basically that about that. Go back to your chart. Watch the videos very well. Go back to your chart and analyze for yourself. All right? Yeah, so it's a very easy something. Once you start paying attention to it very well, you will notice that it's a very easy something, all right? So that's basically all for the video. I don't want to overextend the video. So in the next video, we'll do the last video on this advanced market structure, the last video. And that one is going to clarify everything. I know the first two videos has been kind of complicated. So the last one is going to clarify everything, all right? So cheers and God bless. Have a lovely, blessed, and wonderful week.